Hi friends, if you're a long-term investor and want to build generational wealth, you need to focus on fast-growing sectors. For example, one such sector is semiconductors. Why do I say that? Have a look at my screen and you will see that by 2025, the semiconductor market in India was around $50 billion. But by 2030, this market is likely to hit $110 billion, which comes out to be around 17% of CAGR growth in the next 5 years. But please beware here, a lot of companies are claiming to be semiconductor companies just by putting Semiconductor Private Limited behind them. Please make sure you do a thorough research about the legitimate companies that are genuinely working in the semiconductor space. How do we find out those companies? Very simple. Let me take you to Indian government's policy. Very simple 2 to 3 minutes commentary I'll give you so that you understand how to find out which are the good companies which are acting in the semiconductor space. So let's start from basics. Indian Semiconductor Mission was set up in 2021 with a PLI of around 76,000 crores of investment, which is around $10 billion by Indian government. And as part of this PLI, if you read the Semiconductor Mission, what you will find out is that any company that is going to work in the semiconductor space, which is going to produce or assemble, let's say 28 nanometers or lower chips, they become eligible for 50% of their project cost to be funded by Indian government. This is an extremely important point. So Indian government so far has approved 10 semiconductor plants or companies. Those companies are the ones that are going to enjoy up to 50% of their project cost funded by Indian government. Now, why is this important? Because if a company's project cost is funded by 50% by Indian government, that means these companies can thrive and survive. Their profit margins are likely to be much better because there is a push by Indian government here, right? Therefore, it becomes important for us to understand which are these 10 companies so far that the Indian government has approved. This list may go up, but as of August 2025, there are total 10 companies. Which are these 10 companies? Let me quickly walk you through. First two companies are Tata companies, Tata Electronics Private Limited, Tata Semiconductor Assembly and Test Private Limited. These two companies are not listed companies. If you want to invest in these companies, the only option remaining is investing in the Tata group, right? The third company that I want to talk about is Micron, which is also going to set up a plant in Gujarat. This is also a US based company. It is not listed as of now. Then comes fourth company, which is CG Power. I'll talk about this company. This is a listed company. They are setting up a plant in Gujarat. I'll talk about that in a minute. Number 5 is HCL and Foxconn joint venture that has also been approved by Indian government. But again, this JV is not a listed company. You cannot really invest in this particular JV. Comes number 6, which is Kaynes Semicon Private Limited, which is a subsidiary of Kaynes Technology. So Kaynes Technologies is a listed company. I'll give you the details, the exact latest updates when it comes to the semiconductor business in a minute. Other than these 6 companies, in the month of August 2025, Indian government approved 4 other companies. One is 3D Glass Solutions Inc. here, which is going to invest in Bhubaneswar in Orissa. Silicon Carbide Sem Private Limited, ASIP Advanced Systems in Package Technologies, and CDIL. These are other 4 companies that have been approved by Indian government. Again, these 4 companies are not yet listed at the time of creating this video. So essentially, out of these 10 companies, there are 2 companies that are listed. One is the CG Power and another one is Kaynes Technologies. Now, by no means I am giving you any recommendation here to go and invest in any of these companies. But let me take you through exactly what these companies are doing in terms of the semiconductor business. Also, I will include in this discussion third company, which is not yet approved by Indian government, but they also have a really big plan. I'll talk about that company as well. Before I give you detailed breakdown about these particular stocks, let me also invite you to an exclusive 2 days live AI training program, which is planned to happen on this Saturday and Sunday from 10 a.m. to 7 p.m. This is normally priced at 10,000 rupees, but you can attend it at no cost thanks to our partners Outskill. During 16 hours of live and interactive training program, you are going to learn how to build a personal AI toolkit containing 10 plus AI tools, how to master prompt engineering, how to automate repetitive tasks and analyze data without writing a single piece of code, how to create professional presentations, images and videos just in few seconds, and how to develop AI agents and tools that will give you a competitive advantage. Over 1 lakh professionals from 40 plus countries have already attended this workshop and have enjoyed it. So whether you work in tech, policy, business or operations, this program is for you. Seats are limited and filling fast. So click the link in the description, reserve your seat and join the WhatsApp group for all the further updates. So the first stock is CG Power. Just a couple of days back, I wrote a detailed post about CG Power's latest update on the semiconductors. What's happening in this space is that the company is planning to invest around 7,600 crores over the next 5 years, and they're going to come up with two facilities. In fact, facility number 1, which is called G1 facility, was inaugurated on 28th of August 2025. This facility is now working already. This is a smaller unit. It is going to produce around 0.5 million units per day. It is forecasted that by mid of 2026, there will be commercial production coming out of this G1 facility. So this is a very, very good first step that the company has already taken. Now the second facility, which is called G2 facility, it is under construction and it is going to get completed by 2026. This is going to be the large facility, and this facility is going to produce around 14.5 million units per day. This is huge facility that is going to be completed by 2026. Now, where is CG Power going to get the technology competencies? And secondly, where are they going to get this money or the funding? Let me quickly walk you through. So CG Power has established a joint venture. There are 3 companies in this joint venture. One is CG Power, of course. Second is a Japanese company called Renesas Electronics Corporation. Third one is the Star Microelectronics from Thailand. That is the company that is going to give them the OSAT facilities or the expertise. So from a technical competency perspective, this joint venture is what is going to drive a lot of innovations. Now, before I talk about the funding requirements of CG Power, I also want you to be aware that CG Power very recently acquired another company called Xero. They are into radio frequency chip designing facilities, and this one is already started to add into the revenues of CG Power. They had acquired this company from Renesas itself and for a consideration of around $36 million. Now coming to the funding requirements, so far CG Power has invested around 400 crores of capex in the G1 facility, but their larger expense is going to come in 2026, which is going to be huge facility coming in G2. So where is this money going to come from? There are 2 sources mainly. Number 1 is the QIP. So company did a QIP, qualified institutional placement, where they diluted their equity. But more importantly, they diluted this at around 660 rupees per equity share. Now this becomes a psychological barrier in terms of the stock price. I'm not saying that the price will never come down to 660 per share, but this becomes a qualified institutional placement that the company has done, and this is what you need to take into consideration whenever you are trading this particular stock. Now the second source of the funding that the company is doing is through the internal accruals. For example, if you read their Q1 FY26 results, what company said is that operating cash flow that the company generated was around 441 crores, out of which 383 crore capex was done into CG Semi Private Limited, which is the subsidiary, which is the semiconductor business. And therefore, whenever you are investing in semiconductor companies, please make sure you understand where the technical competency is going to come from and where the funding is going to come from. The companies which are cash generating companies, they have a better chance of making these plants live and up because they are generating cash from their other businesses and they are investing in the semiconductor business. Now also please make sure you do full analysis of CG Power because they also have other divisions, for example industrial systems and power systems, especially the power systems that is generating huge growth for their business recently. 43% sales uplift in Q1, 51% PBIT also in the last 1 year. So huge numbers growth coming from the power sector. And very recently the company has also acquired a land for their greenfield transformer plant that the company is putting up. So in the next couple of years, the company is going to invest heavily in the business. Therefore, you might see ROCE coming down, ROE coming down. All these metrics may not really look very good. Why? Because the company is putting a lot of money. The returns are likely to come in 28, 29 onwards when this semiconductor business start to generate some money for them. If I talk about the valuations of this particular company, if you look at the PE ratio in the last 3 years, this company generally trades at a very high PE. Median PE has been around 67. Right now it is trading at well above 100 PE. This is important for you to understand as an investor. It's a very high PE company. Why is it trading at a very high PE? Potentially because people are paying premium for their upcoming semiconductor business, which is going to be 2 to 3 years away. Also, if you look at the EV divided by EBITDA, EV multiples, that median is also 63, very high. Currently, it is trading at around 79. From a price to sales perspective, median price to sales has been around 9.3. Right now, it is trading at around 10.35. From a price to book perspective as well, if you look at the last 3 years, median PB has been around 31.8. It is trading well below that. From a PB perspective, it is trading at a lower rate. But other than PB, if you look at other parameters, you will find that the valuations might look very high as compared to the median. Could there be a higher valuation risk here? Look, the company is trading at a high PE and PB mainly because of the future earnings prospect. But please make sure you do a thorough analysis in terms of their other businesses as well so that you understand the complete picture. In the interest of time, let me now move to stock number 2. Before I move to stock number 2, so far if you're liking this video, request you to hit the like button. Also join my channel, become a subscriber of my channel so that you continue to learn because you're going to get all the notifications. With that, let's move to the second company, which is Kaynes Technologies Limited. So just a brief background, last year in 2024, Kaynes Technology was one of the companies that was approved by Indian government for a OSAT facility. More importantly, if you see the investment they are going to do is around 3,307 crores, which is almost 50% than CG Power. But if you look at this breakdown, out of these 3,300 crores, around 1,653 crores will be funded by Indian government, central government, and around 20% is going to come from Gujarat government, meaning 70% of this project funding will be done by government. Only 30% is the money that Kaynes Technology need to invest. And this is why I keep telling people that please make sure if you're investing in any sector, you find out what are the PLI schemes that are going on and which companies have been approved under the PLI scheme. Because for these companies, margins are likely to be much better. They are not going to need a lot of money upfront. This is extremely important point that you need to understand as an investor. Right now, coming back to what is happening in this company in terms of the semiconductor facilities, let me quickly give you a walkthrough. Have a look at my screen. What you see is that by September 2025, their facility, which is the OSAT facility, is going to be operational. That's what the management is saying. And hopefully between January and March 2026, which is Q4, the commercial production from this factory will start. But more importantly, this company, Kaynes Technology, has already signed 3 clients for their semiconductor business. One is an American client, second is an Indian company, and third one is a customer from Germany. These 3 are signed customers. Other than these 3 customers, they also have a MOU signed up with 4 other clients. So meaning their commercial production is going to start in Q4, but also they have customers lined up, which is a great place for a business to start their new ventures. Now it is also important that you understand what does Kaynes Technology do. I've covered a lot of details about this company in my previous videos. For example, they're into diversified industries like automotive, industrial, railways, medical. They are predominantly an EMS player. Please go and read about this company so that you understand what is happening in this company. If you look at the top line, 57% growth rate. If you look at the profit after tax, that has been growing at around 92% CAGR growth rate, right? So huge growth rate the company has delivered in the past few years. And also if you look at their Q1 FY26 result, their order book is looking very healthy. It has gone up from 5,038 crores to almost 7,400 crore in Q1 FY26. I was reading their annual report, and what the company's management is saying is that they want to have 30% of their business being contributed from their OSAT, which is the semiconductor facility, in the next 4 to 5 years. Now, in terms of the funding, the company very recently did a QIP, very much similar to CG Power, and the price of the QIP was set at around 5,825 rupees per share. So again, could this be a psychological barrier to break down or not? I do not know that. But typically QIP's prices tell you a lot about how the market is rating this particular company from a price point perspective. Let me now quickly speak about the valuations of this particular company. So if you look at the PE ratio in the last 3 years, median PE of this company has been very high, around 130. Why? Of course, because of the growth numbers. Right now it is trading at around median PE, which is around 129. If you look at the EV multiples, has been very high in the last 3 years, around 87. It is right now trading at around 89, which is the median EV. If you look at the price to book ratio as well, median has been around 13.7. Right now it is trading at around 14.45. So pretty much it is trading at last 3 years median valuations, and whether these are good valuations or not, you can make decision for yourself. So this is about Kaynes Technologies semiconductor business update. And if you like this and if you want to get exclusive content, you can consider joining my YouTube community. Almost on a daily basis, I'm speaking about various assets, for example, stocks, mutual funds, bringing you market insights, which gives you right information at the right time. The feedback of this YouTube community has been excellent. Simply go to my channel, find the join button and be my guest. And with that, let me quickly move to stock number 3. I'm just going to quickly cover that as well. The third company is Larsen & Toubro. We all know that Larsen & Toubro is a conglomerate that operates across the sectors and segments. For example, they're into infrastructure like water, power, renewable, etc. They're into energy, etc. But they have a division called technology division, within which they have something called as semiconductor design. So they have a subsidiary called L&T Semiconductor Technologies, which is a 100% owned subsidiary by L&T Group. And this particular subsidiary very recently got into an asset transfer agreement with a Japanese company. Now there is a very limited information about what this asset transfer agreement is, what they're trying to exactly do. But overall, if I talk about the vision of this company, it was in the news that L&T want to invest around $10 billion in silicon fab, and they primarily want to invest into designing the chips. They do not want to start doing fabrication or manufacturing. They clearly say that they want to outsource that part, but they want to start doing the designing of the chips. Now they have a very tight condition to meet this particular 10 billion investment condition. What is that tight condition? They want to make sure that this semiconductor business generates around $1 billion in revenues by 26-27 before they can embark upon this $10 billion of investments. So they have to meet this condition, internal condition, that is what they have set up, and therefore right now they are not approved by Indian government for semiconductor setup, and they are also not investing heavily in the semiconductor sector. But in my view, you need to really track what is happening with L&T semiconductor business in the next 1 to 2 years, because this is a conglomerate, and if they get big time into semiconductor business, this company is likely to rock and roll from a semiconductor division perspective. Also very interestingly, I was looking at their Q1 FY26 number that came out very recently, and I was amazed to see that their order inflows has gone up by 33%. Order book has gone up by 25%. Their revenue has gone up by 16%. Their reported PAT has gone up by around 30%. This is some good numbers coming out in Q1 FY26. Again, I'm not saying that you go and invest in this company, but keep an eye on L&T as well. And my last point about L&T is that if I talk about their valuations, if you look at the last 3 years, median PE ratio has been around 33.6. It's well below that number. It is at around 31. If I talk about the EV multiples, has been around 18.3. It's come down to around 17. If I talk about the price to book ratio, median has been in the last 3 around 5.1. It is now trading at around same level. So valuations are not very high right now from a median last 3 years perspective. And the order inflow, the PAT growth has been very good in the Q1 FY26. How their semiconductor business will span out, we do not know yet, but definitely we need to track this company from a semiconductor business perspective, because this company has a huge potential and they have been going into newer areas, for example, green hydrogen, etc. Now you might be tracking many other semiconductor businesses. Let me know in the comments if you're tracking any other companies and would like me to go and give you commentary about those companies as well. Let me know in the comments. I hope you found this video useful. If you did, request you to like the video. Let me know in the comments a simple thank you. It motivates me to bring content for you at zero cost. With that, I hope to see you in my next video. Until then, keep rocking.